Now we're talking. Back in the action here once again. Time to get back to work, guys and gals. It's about that time of day again here, folks. It's Wednesday evening. It's September the 4th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, in case you forgot, I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. I have a very important job tonight. My job tonight is to help you guys identify the best levels of support and resistance for tomorrow, the best entries and exits for tomorrow, but most importantly, how to avoid those common rookie mistakes in tomorrow. That's Thursday's trading session. And we got a lot to cover here tonight on the video. We got some oil, S&P, Nasdaq, of course, right? Got some gold, and we'll wrap up tonight on that mighty euro. I'm going to start off here on oil first. Oil, just a sprint going higher here today. And of course, we'll dive into more details on that in a moment. But oil starts to calm down a little bit here, giving us a chance to formulate our strategy for tomorrow. Let's kick this session off here tonight by looking at that oil chart here, because like I said earlier, right, just a sprint, right, as this thing goes higher here today. We get one very shallow pullback here, kind of mid-morning, right, around that, around the moving average, go a straight line up pretty much into a trading range. Now, typically whenever I see this much movement in one direction, I always know to be expecting a range-bound scenario going sideways the following day. So we know we're bullish. We know we have a hell of a move higher here. We also know, right, that moving average starting to flatten out here as well. So we're expecting to see a bit of a range-bound market right now. Now that range-bound market, we get some big news tomorrow. We'll talk about that in a moment as well. But this trading range tells me now I'm looking to buy underneath that range. And I've got maybe four patterns here we'll talk about tonight of how I want to structure this trade to buy down in that battle zone. We'll talk about these specific entry patterns. But what if we go higher here? We get some news tomorrow morning. What if we go higher tomorrow morning? Tomorrow morning, a lot of resistance overhead. This is very, very common right now. A lot of these markets are retesting major highs. They're testing these highs right now, and that really means I've got to be careful up there. There are really three different types of situations I'm looking for as we go higher. So I've got a very specific plan here for us. If we do continue going higher, we'll talk about some ideas on that, right, as we go into the video tonight. But really right now, I want to get this buy. I want to buy off of that low here on the oil. Stay tuned for more on that, though. We're going to dive into a lot more detail here on oil for tonight's video. How about the S&P? S&P, very similar, right? Strong move up into this, what really could be seen as a flag, right? We had it as a range this morning, right, in our trade room. And you'll notice what's happened, though, right? They push right up through those highs, and they're just kind of hanging out, right? We see a strong move up, pull back, retest of that high, pretty much par for the course. Anytime we see a strong move in one direction, we expect we're going to get a chance to buy that pullback, right? And then, of course, the retest the high. The most important part right now is you'll notice we are right at that high. Not a very good spot to be a buyer right now on this S&P, right? We know we're at a major target area for the buyers. You can see they're holding this area right now, which is quite interesting because it definitely gives the bulls some of the edge here, right? The fact they're holding this, and you'll see the Nasdaq in a moment, the fact they're holding this tells me that buyers are buying anything that's being sold right now and holding this thing up. So I'm anticipating we'll try to get this thing to keep going higher. So I've got a couple different scenarios here. As we go higher, I've got really two big patterns I'm watching for as we go higher. But if we can pull back, right, I'd love to get a pullback. The only problem is we've got that range in here. And you know me, right? Anytime we have a range, it's all about what? It's all about momentum, right? We'll talk about these specific setups we're watching for on that pullback, because how this market pulls back, if it pulls back for that matter, is going to determine what type of entry setups. So what if it keeps going higher here? I've got some targets ready overhead, but with all of this resistance, like I mentioned on oil, right? A lot of our markets right now are running into some major highs here, and so we definitely have to be careful. I'm going to break this up into small bite-sized pieces for us tonight on the video, so don't go anywhere. How about that Nasdaq? Nasdaq is even more pronounced, right? It's even more obvious. We have that strong leg up, that pull back, and that retest of that high, and they are literally sitting right at that high. So we know the buyers have control right now in the Nasdaq, but this is a horrible place for me to be buying. Just like on the S&P, I do want to see the price go higher here. I've got two very specific setups I'm looking for as the market runs higher. If we do head lower, right? Again, this is very much a range now, right smack in the middle. In all reality, there's probably going to be a bigger range on here if it pulls back, and I'm looking for buy setups coming off the low of that trading range. Now, again, if we're talking about a range, we want to think two-try rule, and we want to think momentum. We're going to dive into a lot more detail on how to buy it on the pullback, what to avoid as the market goes higher here, and really how to get a big chunk of profit between this high and the top of that next level right there. That's what we're trying to capture as this market goes higher. We're going to break this down, though, into a lot more details here tonight on the video. And then, of course, how about that gold? Nice big strong run higher here on gold. Nice strong run higher today. Of course, anytime I see a strong move in one direction, I expect to see a pullback and a second leg, right? Anytime we see a strong move in one direction, we expect to see a pullback and a second leg. Now, this second leg goes right through those highs, right? Unlike the S&P and the Nasdaq, which we just saw firsthand, S&P and the Nasdaq, they're still struggling to get through that high. Gold, right, flexing its muscles right now as it runs higher. So we know these buyers are loving on this. We know we've got some bullishness in the market right now. But again, look where we are. We're right around those highs here, testing major highs, running into overhead resistance. I definitely don't want to sell this, that's for sure. It's too bullish to be a seller, but it's a little bit too high to be a buyer right now. And so, of course, we're still using that same basic channel. I've got my eyes right on some key levels of support. This will very much be my goal tomorrow, is to buy that pullback. I've got 2, maybe 3 patterns to watch here as we get that pullback. And then obviously you can see that measured move here. We got a big target waiting up overhead. But again, because of all this resistance, I've got to be careful as we go higher. I've got 2 very specific setups I'm watching for as we run higher here. So definitely want to stay tuned for more on this gold. And then, of course, wrapping up tonight on that euro. Dollar gets crushed. Lots of Fed speak today. Everybody's talking about cutting rates. Not good for the dollar. Very good for the euro. Euro jumps higher here into what really looks like a spike in channel. Strong spike up, pull back, higher high. Right? I'm calling this a spike in channels. Spike in channels are very, very good patterns because they always tell me one very important clue. And then at the same time, you've also got the trading range up here, right? Double tops, double bottoms, flat moving average. What do ranges tell me? Two-try rule, and it's all about momentum. So I really want to be a buyer here. I really want to be a buyer underneath this trading range. And I've got my secret weapon here, that trend line coming down in combination with our battle zone off that trading range. Now, as always, a lot of this will have to do with what type of pullback do we get. The strength of the momentum on that pullback will directly determine which type of pattern that we're going to be using. What if the market goes higher though, right? What if it keeps going higher? I've got a key level overhead at that 10,650. And of course, because that area is so tight, overhead here, there's not a lot of space overhead. There's one very specific pattern I always look for whenever I'm running out of open space as we go higher. So as you can see, right, the euro is bullish. Want to buy a pullback on that euro, ready for the euro, ready for gold. Nasdaq and S&P have to prove us something here. And a big old fat juicy range there setting up tomorrow on that oil. We're going to break this down into much smaller bite-sized pieces. But before we jump into the charts here tonight and put the plan together for tomorrow, that's Thursday's trading session, I just want to remind you, to join our mailing list. Just before I publish this newsletter every evening, I fire off an email to everybody on our mailing list, and I want to make sure that you get that email. That way you get the first crack at this nightly newsletter video. So do yourself a favor, join the mailing list. That way you'll never miss another great video. And it's very, very easy. All I need is your name, your email address, hit that subscribe now button, and don't forget, when you subscribe to join the list, your job isn't over yet. You got to go in and check your email inbox, because I'm going to send you a welcome email with a verification link that I need you to click to verify your inbox, as well as a bunch of free, valuable tutorials, right, for you guys to get the most out of our time together here on this newsletter. So don't forget, join the mailing list, name, email address, hit that subscribe now button, and then again, check your email. And sometimes those emails get stuck in your spam filter, so check your spam filter if you don't see it in your inbox. And then real quick, guys, I have a big important question for you down in the comment section below. You know me, I'm always trying to get feedback from you guys. If you could turn back time and go back over and do this again, what is the one mistake that you would try to avoid? If you could turn back time and go back to when you were a rookie, right? Excited to get started, right? No limit to your potential. If I could go back and turn back time, go back 15 years to when I was wet behind the ears and, right, excited every morning to get to my desk, right? I still am excited to get to my desk every morning. But if I could go back and change back time, what's the one mistake that I would try to avoid? I know what my mistake is, but I want to know what yours is, because every time you give me that feedback, it helps me improve this video every evening on this newsletter. So drop me some comments in the comment section below. If you could redo this over again, what would you do differently? I know what I would do differently. I want to hear it from you, because I'm always trying to make this video better. And while you're down there, give me some great feedback in the comment section. Do me even bigger favor tonight. Hit that thumbs up button, because I'll tell you guys, every time you hit that thumbs up button below the video here on YouTube, YouTube rewards me by exposing this video to more traders who are dying to learn these strategies as well. So if you tune in every evening on the newsletter, if you love the nightly newsletter, hit that thumbs up button for me. It means the world to me that you spend so much time with me every evening, and I appreciate you helping me expose this video to other traders who want to learn as well. And speaking of learning as well, if you have any questions about any of the information we talk about tonight, or maybe you want more information about how to get access to our trade room on a free pass, or maybe you want to join our free trading classes, call that toll-free phone number, use that live support tool. I'm always here to answer that phone call, answer all your questions. I love talking to you guys, and I'd much rather give you the honest truth over the phone than to send you out onto Google land, right, where who knows what you're going to get out there on Google these days, right? So get it from me, right, straight from the horse's mouth. Call that toll-free phone number. I'll make sure to save you some time and money in the process. In the meantime, though, drop those comments in the comments section below. Hit that thumbs up button. Call that toll-free phone number. Let's get to work here tonight. Tomorrow, of course, is Thursday. The week is just flying right by. Monday, of course, was a holiday this week, right? That Labor Day holiday in the United States. That means everything's been pushed back here 24 hours this week, right? The big one being the weekly inventory report. Tomorrow morning, 11 o'clock Eastern time, for all you crude oil traders. Really, our cutoff on this is going to be about 10:45 a.m. Eastern time until about 11:05, 11:10 a.m. That's my typical cutoff around that 11 o'clock Thursday morning report. Now don't forget, these are usually on Wednesday evenings, right? Or sorry, Wednesday mornings at 10:30, but because Monday was a holiday, it's been pushed back to Thursday morning at 11 o'clock. Honestly, I wish it was this time of the day every week. I wish they would just make this permanent. I actually like it at 11 o'clock Eastern time, because it pretty much gives us a full morning schedule to trade oil. Now again, this only applies to oil trading, right? S&P, Nasdaq, gold, euro. You won't need to worry about this for tomorrow. But if you're an oil trader like we are in our trade room, you've got almost a full session tomorrow. Just be careful around 10:45, because things start to get really weird ahead of that news that comes out at 11 o'clock Eastern time. And then we'll pick up after 11 o'clock, 11:05, 11:10, right? Once the dust settles. Oftentimes, these 11 o'clock announcements on Thursdays of holiday weeks, oftentimes you get some nice big moves into lunch. So don't be afraid to trade trade that 11:05, 11:10 into about 11:45, 12 o'clock Eastern time. And not to worry, right? Tomorrow morning, we'll do all of this together in our trade room with all of our clients. We do have some news tomorrow morning as well. They got the ADP employment report at 8:15, jobless claims at 8:30. You know, and honestly, I don't think those news reports tomorrow are going to have that big of an impact tomorrow. If I was a betting man, I'm not a betting man. I'm a trading man, right? Not a betting man. But if I was a betting man, I would say probably the U.S.-China trade talks, right, have more likelihood of moving the markets tomorrow, right? Obviously, we heard, right, from Hong Kong and China with their negotiations. That was part of the deal here this morning. OPEC has a big problem on their hand with having to increase production. So OPEC, right, is definitely something. And let's face it, right, rates and the Fed is also on our radar here tomorrow. Now, we got most of our Fed speakers out of the way here today, but you know, that hasn't stopped us, right, from getting more and more headlines here from U.S.-China trade talks, OPEC and the price of oil, right, and of course, rates and the Fed. Tomorrow might be that day where we see another shoe drop in the trade negotiations. Again, we heard from OPEC earlier this week. We'll see what they come out and say later on in the week as well. And of course, the Fed and interest rates, everyone's talking about cutting rates here at the end of the month of September. And of course, the markets are responding, right, very bullishly because of it. So those are the underlying factors. Those are not on the schedule tomorrow, but I'll definitely have my live news feed running on all full cylinders tomorrow morning. Be listening in to see what we get here from the headlines tomorrow morning as well. And speaking of tomorrow morning, 8 o'clock Eastern time, every morning, in our trade room. Hope I see you there with me tomorrow morning. And let's get into those charts here now. Jumping into those charts here. Coming up next, what do we have here on the charts here tonight? We'll go crude, S&P, Nasdaq, gold, and euro on the video here this evening. What do we know about this market right now? Well, we know we had a very big move. We're definitely bullish. There's no doubt about that. What else do we know? Anytime we see a strong move in one direction, right, we're normally going to see a pullback and a retest of that high. If not, right, a follow through of that high, right, like we're seeing on the gold, right, and maybe on the E-minis as well. What else do we know right now? We also know that anytime we see this much movement in one day, right, anytime we see, I mean, as I'm looking at this right now, almost $3 up. Now, in the old days, this wasn't a big deal, but these days, this is a pretty big move, right? We're almost $3 up here right now on the black gold. That's a pretty big move, and usually when oil makes those types of moves, usually the following day is going to be a range, right? Usually it's going to be a range. So I'm expecting to have this thing turn sideways here, but honestly, right, I've got to be ready for everything. So I want to make sure we know how to trade the pullback, right? What to do if it goes sideways, and really what to do if it goes higher here, because if we go higher, we've got all these tops overhead, right? Got a bunch of tops overhead, right? Bunch of levels of resistance here overhead. So as we go higher, we've got to be careful, right? We don't want to get too aggressive here, right, as we go higher. So first of all, let's take what we know right now. We know the market's bullish. We know we're going sideways here right now, right? Got my trading range. Now the key to a trading range is identifying levels of support below the range, such as my battle zone from 67 to 34, and then using what I call the 2-try rule. Okay, and the 2-try rule is pretty simple. What I'm looking for is, I know I'm bullish. I want to be a buyer. I've got my support area here. Now all I need now is, let's get this thing marked up, different color here. Let's get this off of there. I want to stay out of that middle, right? And of course, the battle zone overhead. Okay, so I've got my trading range up top. Okay, the most important thing is we want to get down in this, right, in this support area. When I have a range, buy low, sell high, avoid the middle. Okay, so avoid the range, buy low, at a key level of support. 67 is my level right now. It all depends on here how the market pulls back. For example, if we get a relatively shallow pullback right now, right, go into that 67, 34 area, what's going to happen is a lot of sellers are going to say, see, I told you we're reversing. And those sellers are going to try to sell off that moving average. Once those sellers try to call that top and they try to buy or they try to sell that pullback, now we know exactly where their stops are. We know where their pain points are. That's the most important part of this, right? We now know where the pain starts, and now we can buy literally right into those stop losses, because we know that if those sellers, right, if they take that short off the moving average, they're not going to give it much wiggle room. They're not going to give it a very long leash here, right? If the market then goes against them, they're going to panic, get out, they'll become buyers, and I want to be buying right into those stop losses. Now, oftentimes that moving average comes right around. We can then buy on the pullback as well. Okay, this is one of my favorite, what I call a failure into combination setup. So again, we see a modest pullback, right? Modest pullback. Moving average comes over. Sellers, of course, now try to sell off the moving average. When they take the bait, we're not bearish yet. We're very much a bull market, and buyers are going to see this pullback as a chance to be a buyer. What I want to do is I want to use the stop losses of those counter trend sellers for fuel, right, to go back up to retest the high. Because again, anytime we see a strong move in one direction, we're going to probably go back and retest the high. I want to buy on that move going higher, and I'll do that by buying into stops, waiting for the pullback. And again, I don't want to buy into that range, right? Buying into stops, buying that pullback, failure, right, into pullback setup. Now, I mentioned earlier that when it comes to a range, it's all about momentum. So if we really tumble here, right? If this market really tumbles, right? We get a real strong pull lower, and that could easily happen because we went so far today, right? People may not want to buy very high right now. They may be comfortable at a much lower price, and that may cause that market now to roll lower. Now, as it really collapses lower, now momentum becomes a big problem, because now the sellers aren't going to give up after one try, right? They're going to try once, they'll try twice, and then they'll give up. This is a very subtle difference, right? But very important difference, as you can see. I call this a nested failure pattern. Again, strong move down now. That strong move down goes through the battle zone from 67 to 34, but we're not bearish yet. Okay, I'm going to tell you what bearish market looks like here in a moment. We're not bearish yet. Okay, at that point now, the sellers, though, give them once, give them twice, let them try to sell a couple times off the moving average, then I'm going to look to buy right back to retest that high. And again, it may also, right, it may also whip over, and we may get that failure into pullback combination, right? Failure into pullback combination. Again, I love those failures right into those pullback combinations. Now, another thing I'm watching here for tomorrow, right, on that pullback is going to be a full-blown reversal. Okay, so what does a reversal look like? Okay, strong move down, pull back to the moving average, and then this is where sellers have to show me they mean business. We've got to see some jump off that moving average. We call this a 1, 2, 3 reversal. 1 is that strong move down. 2 is the pullback, touch the moving average. 3 is that jump off the moving average. And then, of course, at that point now, I've got my 1, 2, 3 reversal. I do not want to sell low. I want to sell high at resistance, not sell low. Mark up that original low, mark up the trend line there, bring it up to that high, find that sweet spot. The sweet spot is the initial low, the low of that, or the high of that channel, and I'm looking for that short now off of that high. Where's my target at that point? Target is back down to retest today's lows at 84. And then if we really have the you-know-what hit the you-know-where, right, we're looking at 52.84. I doubt we're going to see 84 tomorrow. But hey, what do I know, right? What do I know? I'm just like you. I come in every morning and I say, all right, Mr. Market, Miss Market, what are you going to give me today, right? I have no idea how far it'll go tomorrow. For all I know, OPEC will come out and say, we're going to drill everywhere, right? And the market will go back to 50 tomorrow, for all I know, right? All I can do is take what we saw today, formulate my plan for tomorrow, and then trade it with you guys tomorrow morning in the trade room. So now we've got our good plan here as if, right, if we pull back here. Don't forget, if we get stuck going sideways here, up here, don't mess around with this stuff. It's too high to buy. Don't get all chopped up, right? Especially when a market's got 3 big legs up like that. Never a good idea to be chopped up around that 56.20 area. Wait for that pullback, right? Get that failure and buy it back up from there. Now, what if we go higher here, right? What if we go higher? Like I mentioned earlier, a lot of resistance overhead here, right? Starting off at 89s. So really at this point, if we're going to go higher here, we've got to see some proof, and then we have to see the pattern. Okay, and there's a couple things I'm looking for as we go higher. One would be a spike in channel, right? We go up and we immediately now pull back, right? We go up and we immediately now pull back. Okay, that pullback now will put me back below the moving average, and now I can look to buy off the low of this channel by using that seller failure, right, into buyer pullback as we go. Makes sense, right? So if we do go higher here, right, we then immediately now pull back off that high. That's where I start looking for that seller failure pattern. I start watching for that bullish pullback pattern as we're going higher there. Now, where's my target at that point? My target now is I'm going to take that same measured leg and project it higher. So let's say, for example, this is as far as we pull back, which I don't think is going to happen, but that's going to be my next objective right up top there at 57.36. So imagine now for a moment, we don't get much more of a pullback. We open up, we run higher, but instead of continuing going higher, right, we run up and we immediately pull back. Mark up that high, mark up that low. You got it. Get that moving average coming over, failure into pullback on the way up to reaching that measured move. Here's two more patterns I'm watching for as well. If it really runs, right, if it really runs 1, 2, 3 breakout, mark the high, mark the low, buying that pullback before we get to that measured move. Or we make a strong run up, big strong run up, 2 try breakout, strong run up, 1 try for the bears, higher high, 2 try for the bears. Because we are running into overhead resistance, I always want to make sure I look for a trap pattern. We call this a 2 try breakout pattern. I've also called this a FOMO breakout pattern, right? As we run higher, the fear of missing out on that move prompts buyers to be aggressive. And because we've got that overhead resistance, we're looking for that trap low. Measured move, right, is our next objective there. So now we've got everything we need here, guys, right? We know we're going to sit sideways here, sit on hands. We know if we pull back, is it a shallow pullback failure? Is it a deep pullback for a nested failure? Or is it a 1, 2, 3 reversal and we're headed back lower? Just make sure you remember, stay patient for those reversals, because reversals always look very convincing, but you always want to give the benefit of the doubt to the overall trend. All right, guys, got a great plan here now for this oil. And again, don't forget, we got that news tomorrow at 11 o'clock Eastern time. Now, before we jump into the S&P and the Nasdaq, I'll bet you've got a bunch of questions for me, right? You want to learn more about all the different terminology I'm using, the strategy I'm using, the entry setups I'm talking about, right? Failures, 2 try breakouts, nested failures, 1, 2, 3 reversals. I know I've got a bunch of nicknames for these patterns, and I want to give you a deeper dive into the entire trading strategy that we use every morning in our trade room. And to do that, I'm going to put a link up here in the upper right-hand corner, and that link will send you over to our website where you can register as a new member of our free trading classes. Our free trading course will teach you all about what I call the 3-step trading strategy, my favorite trading strategy for these crazy markets, and of course my 4 favorite entry setups. So don't delay, pause that video, grab that link in the upper right-hand corner, head over to the website here at School of Trade, get registered for your free trading course. If you're on the website here right now on the blog, there's also a big red button right below the video tonight on the trading blog. In the meantime, you get registered for the free course. I'll see you behind the curtain in our members section here on the website at schoolovtrade.com. Right, in the meantime though, let's get this S&P rolling here for this morning. As we go higher here on the S&P, again, as I mentioned earlier, strong move up. Anytime we see a strong move, we expect to see another leg. We expect to see a pullback. At the very least, we retest the high. At the very most, we get a measured move. Where are we right now? Yeah, we're retesting that high right now, aren't we? And we are not doing a very good job at convincing us of this, right, of this bullishness, right? We saw earlier on gold, how gold had a good example Gold just blasted right through its highs, and so we can be a lot more aggressive on a market like gold. This on the S&P right now, all we really know at this point is that we're bullish. We know we're bullish. We know we're sitting right up at a major high. And look, there's a bunch more where that came from too, because as you look left, right, I've got plenty of tops up here, right? Tops, tops, tops. Lots of places where buyers are going to be prompted to take their profits. We got to be careful, right, as this market tries to go higher. So let's talk about this. First things first, anytime I see a market run up, pull back, and then kind of sit at that top, I immediately now start thinking range. And I mark up the low, and I focus my energy on buying down at that low. Okay, think of it this way. We are seeing rejection off that high right now. Well, and again, this may not last forever, right? We may go through it into the open here, but as of right now, we're seeing clear rejection at those highs. That tells me buyers are not happy about buying that high. They're going to go looking for a lower price to buy at. You know, just like walking on a car lot and seeing a car that you need to get to work, but it's too expensive. So what do? You leave that lot, you go to a different one, you look for a lower price option, right? We know the buyers right now, we know they are, at this point, it looks like they're considering, right, that higher price, but not enough proof yet. So we have to assume, to look left, right, we got to assume this now becomes the range, and I want to be a buyer off of that low. All right, so that's kind of the general idea right now, is sort of get that pullback. Now, if we go higher, obviously, we got to worry about having that overhead resistance, right? So I definitely don't want to sell this market right now. It's not a bear market. I just got to worry about, as we go higher, I really got to be careful here being a buyer as we go higher. So first things first, let's think about the pullback first, okay? Because that's what we're looking for here tomorrow. Now, this is going to be a pretty deep pullback. So whenever I have a really deep pullback, I always got to kind of ask myself, okay, what are some different scenarios that you got to consider? First one, a two-legged pullback. 1 and 2. Draw that trend line down, and then we'll try to use that trend line as support on the opposite side. I call this a 2LP, or a two-legged pullback, right? Pretty clever, huh? One leg and two leg, right? Now, don't get wrapped up in 2 or 3. What if it's 4 legs? It's okay if it's 3 or 4 legs down. But I'll tell you right now, if it's 3 or 4 legs down, you're probably looking at more of a bear market than a bull market. I would say 3 legs max. If we're going 4 legs down, something's probably wrong on this, right? You can see back here, right? There's 1 leg, there's 2 legs, right, going lower. Maybe you call that 2 and 3. I would call that 2 legs, right? Draw that trend line over, get up and over it, use it, right, as support. Same thing we want to do here on the S&P here for tomorrow morning. So that's one thing you're thinking of, okay? Another, we got a range down here, right? Get a range down here. What if we pull back and we sit inside that range, the same range that we used this morning in the trade room, right? We'll go back into that range. Now what happens? Momentum chills out a little bit. Now, what does a range tell me to do? Buy low, sell high, avoid the middle. Okay, I want to buy low underneath that range. That goes right along with the strategy of buying the low of the larger range. Okay, now at this point now, is momentum a big deal? No, it's not, which means I can use your typical 1 try, 2 try failure pattern. Now these come in lots of different shapes and sizes. Sometimes they're very minor, like this one back here, right? That is a 2-try failure pattern there as well. Sometimes they're larger, sometimes they're smaller. We'll go over a lot of the details of what I look for in those patterns in that free trading class that I mentioned earlier in the upper right-hand corner. So definitely grab that free course to learn more of the nitty-gritty details of this failure. But that is something I'm watching here for tomorrow. Again, looking for a failure pattern down below the range. But let's say, for example, again, we know it's a range here. Let's say we just pummel lower, right? Let's say we just collapse lower, right? We don't go back and get stuck in the range, right? That allows the momentum to kind of mellow out a little bit, right? No, in this example, it's not a 2-legged pullback, right? To draw that trend line over. That's not the That's not the pattern. It's a straight down, right? It's a straight down. Remember, at this point now, it hasn't held the pullback yet. So it's not going to be a 1, 2, 3 reversal. Now what's the problem? Momentum, right? Momentum is the problem. So now we're looking for the 2 try nested, 1 try, 2 try. See, that's the trick. When it comes to a pullback, what we're trying to gauge the strength of that pullback based on momentum. And that momentum tells me, do I use the nested variation or do I use simply a seller failure? Again, if we pull back into that range and chop, 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 that absorbs a lot of that momentum. So when we try to go lower now, now this is a very easy pattern. It's a seller failure, right, into a bullish pullback for a run back up to retest that high. Okay, but if it just smokes that moving average and rolls right through it, like what range, right? I don't see any range. Yes, I do want to be a buyer down here as planned, but now that momentum is just so red hot now, sellers are not going to give up without a fight. They're going to try once, they'll try twice. If I get lucky, super lucky, I'll get a trap low on that. Right? Beautiful entry there, by the way, a crown reversal entry. We'll talk more about that in our treatment tomorrow morning. But the bottom line, though, is as long as I have a strong momentum move down, I've got to give the sellers the benefit of the doubt. Let them try once, let them try twice. Then I can buy right into those stop losses. At that point now, everybody's roped in. Buyers are buying. Sellers realize they're wrong. They're buying as well. Beautiful opportunity there, right, to be a buyer off that pullback. Now, how does it turn bearish? Strong move down, pull back to the moving average. Yep, strong move off the moving average. So you'll notice back here, right, they didn't get that. They got the strong move down, kind of, right, pull back to the moving average. They're going to jump off that moving average. If they don't, right, we'll pull the string, and this thing will just flirt right back to retest the high, right? So we don't want to go trying to sell. The moral of the story is you don't want to sell that first pullback, right, because you're going to end up like the previous pullback, failing. Okay, but if the sellers can hold that pullback, though, let some other poor sap do it, right? Let somebody else step in front of the freight train. Let somebody else take that 35% probability trade. Not on my account, and hopefully not on yours. You know better than that, right? You don't want to go against momentum because it doesn't matter how much money you can make if the percentages are so low. You're going to go broke before you make any money off it. You might make money once in a while off that trade, but just like getting lucky at a casino. Yeah, you might hit a casino good once in a while, but go every day, and eventually the law of large numbers. Again, eventually the probabilities, right? Those casino owners are not fools, right? They know the probabilities. They got to keep the drinks flowing, right? Keep the dancing going, keep you gambling, because eventually those low probability odds are going to come back to bite you. That's the same thing right here. Okay, you're not going to take one of these trades. You're going to take thousands of these trades in your career. That's the goal, and I want you to leverage, right, those higher probability trades. So bottom line is I'd much rather skip this 35% winner to then go out, mark up that low, mark up that low, mark up that high now, and get in at these 76, 77, 78% winners right after we get the reversal. It's up to you, though. It really is up to you, right? You control your own destiny on this. Do you want to dilute your trading and make your broker rich by over trading with low probability patterns? Or do you want to wait patiently, get the higher probability stuff? Yeah, you're not going to have as many trades, but they're going to be much better trades. It all depends on what's important to you. Do you want to trade more or do you want to make more? We don't optimize our trading strategy for trades. We optimize our strategy for money, right? For profits. Okay, so you want to get that 1, 2, 3 reversal, sell off that high. Where's my target? My target's back down to retest that low, but that big round number at 2,900 will definitely be a very easy target for us as we go lower. Now, as we go higher, I mentioned that measured move, right? We get that big strong leg higher, right? That'll be the measured move. Measured moves are very, very common, right? Because of they're so easy to find, right? They're so easy to match up one-to-one. Always very reliable. The problem is we have this darn right block of resistance here. So yeah, you could sell this, right? You could sell it. I think you're really playing with fire though. You could sell it. What would a short trade look like? Crown reversal, right? My favorite reversal pattern. Up once, pull back, lower high, lower low, trap high, go. Okay, lower low, higher high, trap high, and go, right? We call this a crown reversal in our trade room. Okay, you might have a nickname for this, some other nickname. But the bottom line, though, is we see a strong push higher. Okay, we see buyers try to buy the pullback. I'm not buying that pullback, obviously, right? I'll then wait for that lower low, second try for the buyers. Remember, the market's bullish at this point. Okay, give the bulls the benefit of the doubt. They try once, they try twice, trap, and go. Now, the reason why that trap is so important is because that's where buyers are not buying, right? That buyers, right, professionals are buying here. They're buying here. They're buying low. Professionals are not buying high up here. So that allows us now to kind of slip our orders in. And if we're right, good payday. If we're wrong, small amount of risk for a big amount of reward. Now, again, at this point right now, this is a difficult to take because you've got that real strong trend right now. This is probably going to be less than 60% winning ratio, right? Probably not going to be a highly reliable trade at this point. Okay, things may change tomorrow. We may start going sideways up here. We may start seeing these buyers stall, and we may change that a little bit, right? We may start feeling better about selling this market. But as of right now, we're definitely not there right now. We got to see some weakness from the buyers before we can try to call the top on this market. Okay, and again, we'll know more of that tomorrow once we see it happen in real time. What about buying as it goes higher here? There's two basic patterns. We talked briefly about them on the crude oil. The first one is the 1, 2, 3 breakout. I don't trust this first buy because, again, we're right at these highs. And a lot of times we'll go through the high, we'll pull back, and we'll struggle and then dump right back into that range. You probably know exactly what I'm talking about. Okay, this is why I don't trade breakouts. So wait for the breakout, right? Wait for now. What I want to see is I want to see another leg higher, pull back, run now. Mark up your channel. Mark up that high. There's your sweet spot. And now we know where we're trying to be a buyer on the way up to that measured move. Okay, we call it a 1, 2, 3 breakout with a hidden channel pullback, right? Because that hidden channel, right, that channel, not a lot of people are going to see it at first. And that pullback happens fast, and you got to be ready for it. Now, speaking of being ready for it, what if we blast here, right? 6 o'clock Eastern time comes around, they open up in Asia, big bull move higher. Okay, what's a good pattern as we go overhead? Strong move up, 2 try breakout. 1 try for the bears, higher high, 2 try for the bears. And because we have that measured move overhead, because we're up at major resistance, I definitely want to see bears try once, want to see them twice. What's really going on here is the first pullback is usually profit taking from the buyers who are in. The second pullback is the actual short sellers coming into this market. The most important thing about this setup is you've got to trigger the FOMO. You've got to get a strong move higher. When you get that strong move higher, that's going to tell everybody, get in while you can. And that's going to have buyers now, again, because of that measured move, because of this overhead resistance, we're looking for that trap low. 1 try, 2 try for the bears, trap low. So the 2 try breakout pattern. This one has resistance overhead, so we're looking for a trap in combination. And again, these patterns, right? These patterns, I'm just simply drawing on the screen right now. You can see hundreds of examples of how we apply these patterns to our favorite futures markets. Grab that free trading course in the upper right-hand corner. Hit that big red button below the video tonight. Get registered, get learning, right, and get trading the right way. How about the Nasdaq here? Nasdaq is very, very similar to the S&P. In fact, the S&P actually looks even better than the Nasdaq, because you can see here the Nasdaq is a strong move up, right, running right into that high. And so we know we're bullish. It's not like we're bearish right now. It's just this is a horrible place to be buying, right? You are literally, to use the car analogy, you're walking on the dealership lot and saying, sir, give me your most expensive automobile, and then even mark it up even further from there, right? You are their best buyer. You're foolish, though, to be spending all that money, right? To be buying that high. You don't want to go in and say, give me the highest price you've got in the lot. I'll take 2 of them, right? Not a very good investment in your cash. Well, let's be honest, buying a car is never going to be an investment anyways, but you get the point, right? You get the point. You're buying extremely high right now, and the reality is most people, unless they don't care about the money they've got in their account. Most people are not going to get too excited about buying that high. So now what you're going to do is you've got to get the price at a lower price to attract more buyers, right? So now the dealership says, oh, that price is too high. What if I knock off a couple $1,000? What if I make the price a little bit lower? Does that work for you, sir? And you go, sure. Throw in some floor mats, right? A little sunshade, and I'll take it home right now. So we don't want to buy high, right? We want to buy low. We want to get that price pulling back. Now again, as I mentioned earlier, right? I've got this high. Anytime I see a double top like this, I already know I'm going to mark up that low now, right? And find that range. And this is really where I want to be a buyer now. All right. So now, what if we go higher, right? If we go higher here, right? If we go higher. So let's say again, here's the car analogy. Now let's say while you're on the lot, you're looking at that really expensive car. Okay, your phone rings, right? And the person on the other line says, "Hey, heads up, right? Something has just changed. We need that car now, and we need it. No negotiations. Take it, right? There's some sort of urgency now. Okay, there's some sort of urgency now. Okay, or maybe before you buy the car, you go online to Auto Trader or Blue Book or whatever it is, right? And you realize, oh my goodness, this car is in short supply. I've got to get this right now, right? There's not a lot left. We've got to create some sense of urgency that will cause traders to react. And that sense of urgency is that strong move going higher, right? I've got to get that strong move going higher. That strong move going higher now, it gets the FOMO brewing, right? It gets that sense of urgency as we go. I got to see proof. You got to show me proof that buyers are willing to buy it as it goes higher. So really, a lot of this is very similar to the S&P, right? A lot of this is based on, again, how do we pull back right now, right? Do we get a two-legged pullback, right? That 1-2 pullback, draw that trend line down, up and over and in, right? That two-legged pullback, that is always something I'm watching, especially when the range is so large. Or do we see this market pull back, chop around, right? Mellows out momentum, then 1-2. It's basically a seller failure into a bullish pullback, back up. Again, just remember, stay out of the middle of that trading range. And again, sometimes they're very small, sometimes relatively large. Or do we just slice right through, right? Do we slice right through? And once we slice right through, now we know that momentum is really cooking to the downside. We know those bears. Let them try once, let them try twice. Give them the benefit of the doubt if it just slams lower, right? If it just slams lower, now you got to expect those bears. They're probably not going to give up after one try. They'll probably try a second time, wait for them to fail after that second time, and rip it right into those stops, right, as it rips right back up, right, to retest that high. All right, guys, those are the three scenarios I'm watching for on the pullback. Now, as we go higher here, some food for thought. Okay, if we keep going higher and then go sideways, okay, food for thought. We keep going higher, but we go sideways up here. We don't pull back. This will also apply to the S&P. Okay, what is this? This is very, what's the word here? It's proof of acceptance. Okay, using that car analogy, while you're debating of whether or not you want to buy such a high-priced car, you see 5 other people come in and buy the same car, same price. And now you're going, oh, okay, apparently I do have to buy, right? You know what I'm saying? So we go sideways now, right? The market goes sideways now. Now other people are showing up. They're buying the same car, right? The same car, same price. And you're going, oh, shoot, I thought this is a really high price. Apparently it's not. Apparently everybody accepts this price, right? So at that point now you're trying to find anything you can get your hands on. Oh, there's one at the corner of the lot, right? Give me a discount on that one and I'll take it today, right? I look for that buy, right? That discount right below that range. And again, the discounted price I'm talking about is a failure pattern, right? We let those sellers try to take it lower, get the moving average coming over, bears to the sell off of it, right? And we're buying into those stops. okay? Or we get that sense of urgency, right? That sense of urgency, that 1, 2, 3. Oh, shoot. If I don't do something now, I'm not going to have a car to drive to work tomorrow, right? Crap. I better do something now. Mark up that high, mark up that low, mark the sweet spot, right? And we're buying on the way up to, where was it? Up to that measured move, all right? Or maybe you're sitting on the lot and the guy says, hey, Joe, I hate to say this to you, brother, but there's only one of these left, right? And you see 10 people waiting in line to buy it, right? Big break higher. Yeah, FOMO breakout. I need a car, right? I don't want to go shopping all day. I need a car right now. 1 try for the bear, 2 try for the bear. Again, lots of resistance here overhead. I know I've got the measured move. Because of that, let those bears try twice. Get that trap, right? Get that trap. Same basic idea. All right, guys? So now it's pretty much, again, there are kind of 3 basic scenarios. How do we pull back? Again, there are 3 basic patterns on the pullback, right? Do we stall up here? Do we accept the current price, right? 1 try, 2 try, failure back below it, right? Get whatever you can get your hands on down there. Or do we, right, sense of urgency? 1, 2, 3, breakout, up, back, and go, target measured move. Or, right, hello, FOMO breakout, strong move up, everybody clamors now, get something, 1, 2, trap low, and go. All right, and again, I'm just drawing on the screen right now. I've got lots of examples of how we apply these to our favorite markets as part of that free trading course. Let's keep rolling. Nasdaq here now, over to that gold. So the kind of the analogy all plays in pretty well now, right? Gold we know is bullish. Okay, gold we know is bullish. We know anytime we see a strong move in one direction, we're going to probably see a retest of the high, right, by the pullback, retest of the high, or at the very most, right, the measured move. So we know they already got the retest of the high, and they they blew right through it. We also know that their next stop here just might be that measured move up at 1576.2. The problem we have right now, though, is we are right at some major tops. Okay, now this is a little bit tricky, but now that we've talked about the previous charts, a lot of this will kind of blend into itself, right? There'll be a lot of overlap, right, on this previously. It really has a lot to do with, do we stall out, right? Do we accept prices where they are and stall out? There's a lot of resistance here. So what might happen is buyers might say, you know what? I'm not getting out of my position. I think the world's on fire right now, figuratively speaking, of course. Okay, and I'm not getting out of my position. Gold's going to keep going higher, right? Central banks are worried, right? I'm going to keep this open position, and so buyers may not take their profit, right? Market stays there. Sellers don't want to sell this. It's way too bullish, right? Technicals and fundamentals are all pointing up right now in the yellow metal, right? There's a good chance here we sit there. Right? Just like we saw yesterday. Right? We run up and we sit. We accept that price. People aren't selling it. They're not getting out, right? And then what do? We wait for that pull back. We wait for that failure. You got it, right? And we buy it back up. Okay, that's the same basic idea now, right? So here we are. We go sideways, wait for that move lower, get that failure. Okay, very similar we saw earlier on gold, right? Failure into pullback, going back up, we go from there. All right, so do we stall out here at the highs? And again, just look left, right? This is exactly what happened on gold, right? Strong move up, go sideways. We don't want to buy high, we want to buy low. We wait for the pullback. We wait for the sellers to try to sell off the moving average, right? Failure into pullback, retest those highs, right? We run through the high now. Do we go sideways here? I don't know. We'll wait and see what we get up next. Okay, what if we pull back though? Okay, pullback here. Now the pullback here is kind of cool because the pullback now, we can use the low of that, right, of that channel. So what you really want to think of it now is we've got that prior high, that channel right there, that really creates kind of that, right, that battle zone, if you will, right? That kind of creates that battle zone. 3 basic patterns here. And very, very similar, once again, to what we saw in previous charts, in the sense that do we get a 1-2 pullback? Let's get that off there real quick, right? Do we see a two-legged pullback? 1 and 2. Draw that trend line over. We'll go into the battle zone. Okay, that does not mean we're going to buy there, though. We're going to get up and over and use that. And sometimes those two-legged pullback patterns, they take a lot longer than you might want them to. They do, right? A lot of times those two-legged pullbacks will take a lot longer than you think they will. So stay patient on that. Or, right? Or maybe we, of course, run lower, relatively shallow pullback. We don't need the low of that channel. It'd be great, but we don't need it because we got that support level here. Right? So that will work too. So of course, moving average comes over. Sellers try to sell it. They fail. Failure into pullback. And back up where? Back up to retest that high again. Okay? Or maybe we really get clobbered, right? Big move down. As we go lower, now what's the problem? Momentum. You got it, right? 1 try for the bears. 2 try for the bears. This is where that trend line will really come in handy. Okay, this is where that trend line will really come in handy. What we may also see is it may also run below the trend line. Moving average comes over, right? I'm talking about the low of this channel, that is. And now you've got sellers trying once, trying twice, right? Off the underbelly of that channel, right? Now you know exactly where stops are, failure, pullback. And that's a beautiful trade if we can get it. I hope we get that tomorrow, right? Because at that point now, your risk-reward ratio is gorgeous at that point, right? Buying nice and low. Yeah, you're going to wait for it, right? Because you got to give those bears a couple tries there. You'll have to wait for it, 1 and 2. Okay, let those bears try a couple times. Then you can be a buyer. But that wait will be well worth it, right? Because it will be a very good risk-reward ratio on that trade. All right, guys, those are 3, actually, 2 different scenarios here. One being the range, the other, of course, being the two-legged pullback, trend line up and over and in, target back to retest the high, or straight down, right? 1, 2, and back up, or simply a very shallow pullback off of my buy zone here at 56, right? Shallow pullback, moving average comes over. Bears try to sell it, failure into pullback, back to retest the high. Now, what if we run higher here? Okay, what if we run higher here? If we run higher here right now, this channel now will probably continue to be in play. So if we run higher, right, if we do see it go higher, we'll probably, right, that channel will probably be in play because of it. At this point, you've got to be worried again. You're getting closer to that measured move. 2 options here right now, and it really all depends on how this thing sets up. Obviously, I want to buy the low of that channel. But I'll tell you right now, if we go 1, 2, 3 legs up, it's going to be difficult to be confident buying the low of that channel. What will probably end up happening is this will end up being a level of support. We'll go up, go down, right? Come off that level, failure, and pull back. The buy will probably be just below that channel. Okay, to make a long story short. Okay, so as much as I want to tell you, as the market goes higher, just buy the low of that channel. I love trading channels, but not this late in the channel, right? You want to take these back. Obviously, not the one right here because you're buying into that high, right? But what typically happens though is if you've got a big channel here, 1 leg, 2 leg, 3 leg, right? You've got 1, 2, 3. You're probably not going to get a very reliable trade that next pullback to the low of that channel. It's probably going to correct. The moving average will come over. The sellers, of course, will try to call a top, right? They'll most of the time fail, and we'll get that run back up to retest the high. So kind of the moral of the story is if we do keep going higher, just wait for the pullback. Right? Wait for that pullback because it's going to be very late in this channel, right? We got 1 leg, 2 leg. If it does keep going higher here, yeah, I would love to think we can buy off that channel and, maybe 20 out of 100 trades will work like that. But again, you want to be more on the side of the right probabilities here as we go higher here. Get this market to pull back, get the moving average coming over. Sellers will try to sell it, right? They'll try to short that thing off the high. I'll be waiting there, right, to buy into their failure. Targets at that point now, of course, up at that measured move. Does that make sense, guys? Right, so as we go higher here, be aware we're getting late in this move right now. You want to wait for that pullback. You definitely want to wait for that pullback. All right, guys, great looking chart here on the gold. Looking forward to more tomorrow. Wrapping up here now on the euro. Euro is pretty much your classic case of two chart patterns that can kind of be used together as we go higher here. Strong spike, right, into what looks to be like a spike in channel, right? Mark up those highs, mark up that low. That looks like a spike in channel to me. The spike in channel you can see also then went to a range, strong move up, right, into a range. So both of these are actually pretty important clues because, first of all, a spike in channel, what does a spike in channel always tell us? Spike in channel patterns tell us that we really haven't had much of a pullback yet. And so we usually get real deep pullbacks at some point during a spike in channel, right? Spike in channels, by definition, you really haven't had much of a deep pullback yet. And without a deep pullback, you know what's going to happen, right? Buyers are waiting on the sidelines, and they're going to take a big old chunk of anything that pulls back for them, especially with all the Fed speak today talking about cutting rates, right? Very, very bad for the dollar, which, of course, by default is very good for that euro. So buyers are definitely going to want to be buying on a pullback, right? What else do we know? We also know the market is bullish here into what looks to be like a trading range. Double tops, double bottoms. Now, ranges tell me to buy low, sell high. Okay, we know we're bullish. I want to be a buyer. What I'm doing is I'm taking that trading range and I'm using it to factor in my buy zones. So that buy zone now, right, you can see it fits right in with that deep pullback on that spike in channel. But there's one more thing. And that is I'm always looking for kind of those little trend lines that nobody else is looking for, right? These kind of expanding trend line. You know, most people look for trend lines that go with the direction. I find oftentimes the best trades happen off trend lines that go against the direction. In other words, right? Market's going higher here, but yet I'm drawing my trend line going lower. And the reason for that is because, as you can imagine, right, that's going to be a great place for us to risk small and earn large, isn't it? That's a great risk-reward ratio if we can get the right entry pattern. All right, let's talk about the right entry pattern, because if we do get that deep pullback, the right entry pattern will definitely make or break us here tomorrow. So we know we've got a range. We know we have our spike and channel, and really, I really want to get that trend line. That would be ideal. It's not absolutely required because I would gladly look for, for example, we've got this channel here, right? Got that channel here. I'd be more than happy to get that pullback down into the battle zone, right? Moving average comes over. Sellers, of course, now, maybe they try to sell off the underbelly of that channel, right? And we're buying into their failure pattern, pullback pattern, right? Failure pattern, pullback pattern, and back up to retest those highs. That is something I can definitely get down with. Or do we really collapse, right? Do we really collapse down here? We're off that trend line now, but now we're very, very bearish. One try, two try, and back up. I like the idea of that trend line. Okay, what I don't like though is if it just goes straight down, right? Straight down. Bears try once, bears try twice, and we go from there. Now, this might get interesting because you got that trend line or that range right here. And of course, with that trading range, we start running sideways, right? If we start running sideways, again, inside that range, stay away from the range, buy low, sell high. And because we're bullish, we're looking to be a buyer on this. Moving average is flat. We see that move lower. At this point, might be a little bit tricky to get that trend line, right? If we do get that trend line, though, that'll be a very big move down at that point, right? Nested failure. One try, two try, back up into that range, right? I know I'm repeating myself a lot, but I want to make sure I go over these patterns with you so you're ready for all the different scenarios, right? It's important to have plan A, B, C, and D if you need it, because the markets can go up, they can go down, they can go sideways, they can reverse. You want to make sure you've got some plan ready so you're not scrambling and just chasing after markets if and when you do get it. So we know at that point now, I want to get into that buy zone here, get that moving average coming over, right? Sellers, of course, now will try to sell off of it. We're looking to buy into their failure and buy back up. All right, guys, so looking to be a buyer here. Now, what if we go higher here? Okay, what if we go higher? If we go higher, we actually have quite a few options here. If we go higher, just keep your eyes on that channel. And really at this point, my big question is, do we go higher in the upper half of that channel? Because if we do, that then becomes its own spike in channel. And that tells me now, deep pullback, right? Get that deep pullback, moving average comes over, and now I can buy off the low of that channel, right? So if we keep going higher here right now, I can still use the low of that larger channel, okay, to buy that pullback or to buy a failure setup. Okay, makes sense? Okay, now what if we break? What if we really run? If we run, you're not going to have enough room for a 1, 2, 3, breakout here. It'll have to be a 2-try breakout. So strong move up, 1 try, and again, we got major resistance overhead. 2-try for the bears, trap low, and go. Your trap pattern will definitely be your go-to, right, for us to get that last little drop of profit before we went up to retest that high there, right, at that 10,650. All right, guys? So again, as we know right now, looking for a pullback, looking for a failure, right? That failure goes back up to retest that high, or do we really tumble? Nested, 1, 2, right? And then again, 2-try for the bears, back up to retest the high from there. Again, don't forget, right? Stay out of that middle. If we chop, stay out of that middle, 1 try, 2 try, buy it back up. Or do we keep rolling higher, right? If we keep rolling higher here, use that, right? Use that low, get that shot going lower, moving average comes over, seller failure, you got it. You could finish my sentence at this point, couldn't you? Right? Failure into pullback pattern, right, as we go higher, or it's that strong move up, right? Strong move up, 1 try, 2 try, trap. Get that trap high because you don't want to be buying up into that overhead level of resistance. And guys, again, I'm just going over all of these, right, as some examples here for tomorrow. Tomorrow morning, though, we are going to trade this stuff together tomorrow morning, 8 o'clock Eastern time. We open up every morning. I want to see you there with me. We've got a great strategy. Again, I call it the 3-step strategy. You can learn all about our trading strategy, get access on a free pass as part of that free trading course. Right to the left of my ugly mug, grab that free trial. The free trial includes your free pass, your free trading course, hundreds of examples of how we apply this strategy to our favorite markets. And again, don't forget, if you want to get registered for tomorrow morning's trade room as a new member, join as an advanced member. Our advanced membership package is all inclusive. It includes everything that you're going to need to be successful: video classes, daily trade room, ongoing training, ongoing support, all the tools and templates. You can learn more by following that link right below the video here tonight. If you're on the blog, it's the blue button below. If you're here on YouTube, I'll put all the links in the description of the YouTube video. But that'll do it for me now, guys. If you have any questions, don't be afraid to call that toll-free phone number. Use that live support tool. And as always, tomorrow morning, 8 o'clock Eastern time. If I don't see you guys there tomorrow morning, come back and see me tomorrow night on the next edition of this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.